Hey everyone, I hope you had an amazing Thanksgiving. Today's video, it is a reflection of what's happening in the marketplace right now with GE. As most of you out there are aware, GE, it has completely plummeted in share price. And a lot of people here on the dividend investing community, but also YouTube in general, whether they're dividend investors or even just value investors, all kinds of investors, they're thinking, hey, what should I do right now with GE? Should I buy it? Should I hold it? Should I sell it? What direction should I take with this stock that has plummeted so much? Now, I do not provide specific information or advice here on YouTube. I'm literally just sharing my personal journey. But what I want to do today is I want to share my personal thoughts about GE, like what I would be doing if I personally owned GE right now, how I would approach the situation, and in particular, I want to go through my decision tree process. This process is really important because it applies not just to GE, but really any stock that plummets or is facing challenges with share price. And I actually own 38 dividend-paying stocks in my portfolio, and I expect over time, I've already faced this in the past, certain stocks that I own, they will face challenges. Some may face very deep challenges. And this framework, what's so cool about it is this decision tree framework, it not only applies to GE, but it applies to any situation. And it literally takes the emotion out of the equation and it lets one approach a plummeting stock situation just with logic and with reason, which is really important in these types of situations because it helps the investor, in my humble opinion, make all the right decisions. So let's get started. So welcome to the video, everyone. So happy to have you here today. Let's just jump right into it. In July of 2000, believe it or not, GE was trading at $57.81. Fast forward to today, November 25th in 2018, we're at $7.57. Literally over this 18-year period, this stock has plummeted by 87%. Man, that is quite frustrating for anyone who has been involved with GE. And by the way, if you invested in GE, if you currently own GE, I truly do. I wish you all the best. I am really rooting for everyone in this stock, although I do not own any GE and I don't plan on owning any GE. I'll link to a video in the description below that I shared quite a while ago on this very topic with some more information as to why I don't want to own GE. Anyways, why is the stock down? Well, just interestingly, the debt, it's really high, 115 billion, higher than the market cap, which is only 66 billion at this point. There are really a few reasons that it's down. They have made poor acquisitions. They have paid too much for acquisitions. The acquisitions have not performed properly. With these acquisitions have come huge costs, especially with employees. They've taken on a lot of employees that they can't afford to pay for. They have too much debt, and operating expenses are just too high. Again, that falls back to just the employees. At least that was what I have deciphered from my online research. I think a lot of people, this equation, this story with GE, it's just still unfolding. I don't think anyone has pinpointed 100% of all the things that have gone wrong. But long story short, it is a very poor strategy that this company has taken, and it has really hurt the company. And in fact, they just cut the dividend to 1 penny per quarter, which is basically, in my opinion, as a dividend investor, pretty much worthless at this point from a dividend standpoint. Now, I want to point out here to the dividend history. This is interesting. When I evaluate stocks for my personal stock portfolio, because I invest for dividends, I like to see dividends going up over time. And you guys know, if you've been following me for a while, I own some stocks where the dividend doesn't really grow. It's just flat. But anyways, this stock in 2017, in September 2017, they were paying 24 cents a quarter in terms of the dividend. Fast forward to December of 2017, and they cut the dividend in half to 12 cents. Now, in November of 2018, they cut it to 1 penny. Now, What's interesting here is this recent dividend cut. It shocked a lot of people, it surprised a lot of people, it scared a lot of people, and a lot of dividend investors are starting to reevaluate whether they should own this stock or not. But the question that comes to my mind is, why were these same investors not already asking this question? Because they already cut the dividend back in September of 2000 or December of 2017. And so in my opinion, this dividend cut in December of 2017, this should have been a warning, and whether one owned the stock at that point or whether one bought after that dividend cut, in my opinion, whenever a dividend stock faces a dividend cut, that is a big warning. And so people ask me, Ian, if you own GE, what would you do? Quite frankly, I don't know 100% what I would do because I don't own it. And unless I actually own something, it's a lot different hypothetically doing all this stuff versus owning it. But I'm telling you, if I had owned it back then, I probably would have thought hard about selling at that first dividend cut there rather than waiting all this time for the most recent one. But it's really hard to forecast what I would have done, but certainly I look at that as a huge warning. Anyways, I want to move on to my decision tree process because I am actually going to use a few stocks that I have experienced with. Two actually that faced dividend cuts, one that I decided to buy after they cut the dividend, and one that actually I owned and sold during challenging times during a time of dividend cuts. So, tale of two stocks, I'm going to talk about both of those. But before I even do that, I want to talk about my decision tree because this really helps formulate how I would approach GE if I owned GE. First and foremost, I would want to answer the question, what type of investor am I? You guys know I'm a dividend investor, but there are many different types of investors. There's dividend investors, deep value investors, contrarian investors, growth investors, so on and so forth. But I just listed a few here because the types of people that watch this channel tend to be income oriented, or at least value or deep value or contrarian oriented. Anyways, as a dividend investor, I'm going to approach a situation a lot different than someone who is deep value. Dividend investor generally is going to invest for cash flow. They want to buy stocks that pay cash flow that can be used to pay the bills. I buy and hold stocks forever. I love cash flow. And if the cash flow is not there, that is kind of troubling because the primary objective of my investing is the cash flow, it is the dividend. By contrast, a deep value investor, oftentimes they don't care about the cash flow. They're looking to buy deep value. They're looking to buy low, sell high, and they try to buy when there's a lot of pessimism out there and everyone hates a particular stock. So right now, being a dividend investor, quite frankly, my whole decision tree will be completely different than someone who is a deep value investor. And so the rest of my questions are really dividend investing oriented. But this first question, this first screen is really important because let's say if I were a contrarian investor or a deep value investor, if I were, quite frankly, maybe GE would be a very interesting stock to look at right now. I don't think the turnaround is going to be easy. I certainly don't think that they're going to go out of business, but I think it's going to take some time. I think there could be a turnaround. Are they going to be paying a big dividend ever again? I don't know. Are they really a good income stock going forward? Certainly, I don't think so. But again, deep value investors have very different objectives than dividend. And you guys know sometimes on my channel, I do buy deep value stocks, but I only buy them if they coincide with my dividend philosophy, which is first and foremost the main thing that I'm focused on. I will link in the description below actually to a deep value stock that I purchased or I added to my position in 2018. You'll see more about my philosophy on deep value and how it can coincide with dividend investing. But again, here, there are a lot of value investors probably starting to look at GE at these levels. Maybe it's not low enough yet, but certainly it could be an interesting turnaround value type investment. But from a dividend standpoint, I actually don't really think so, in my humble opinion. Again, just speaking from personal experience here in my personal philosophy, personal situation. Anyways, if 1A then, so again, I'm going on now, the rest of the questions are kind of, if I'm a dividend investor, which I am, what's next in the decision tree? By the way, if you're going to go through this exercise at home, whether it's with GE, whether it's another stock that's facing really hard times, I totally think it makes sense to write it down. I have an investment journal. I'll link in the description below. I did a video about it. I like to journal about my investments. This is a prime opportunity with something like this to journal it out, to put the emotion aside, and to really get one's thoughts on paper. So that's what I do in these kind of situations. Anyways, is the dividend cut temporary or permanent? How long am I willing to wait? Again, I'm a dividend investor. They cut the dividend. They cut it twice now. They cut it a lot, down to 1 penny. It's basically gone. And so the question becomes, okay, I invest for cash flow. Do I think this dividend is going to come back or not? And how long will it take? And when it does come back, what kind of yield on cost would I even see? And so I don't know what's going to happen with GE, but I certainly think that their balance sheet has major issues. They're basically in the position where they're going to be forced to sell assets to shore up their balance sheet. And so the challenge with this kind of company is I don't think the dividend is going to come back anytime soon. And so the question, though, becomes, at some point I actually think it will come back. The question becomes, how big will it come back? Will it come back to its former height? And what would that imply for my yield on cost if I buy at this price? But also, how long am I willing to wait? Am I going to be retiring 5 years from now and need income right away? Or is my retirement 30 years out and so I have a ton of time to wait for my income? Or am I looking for an early financial freedom 10 years out? I need the income, I need the dividends. I can't wait longer than that. All of these questions become part of the decision tree. I quite frankly don't know all of the answers for GE, but my thought is that the dividend cut, it is temporary, but it is also a long path for them to get it back. And by long path, I'm probably thinking 10 years or more. And so the question comes, do I want to wait that long? From personal standpoint with something like this, if I did hypothetically own it, no, I would not want to wait that long. Hopefully, though, if I had owned this thing, I would, well, one, I wouldn't have owned it after this first cut, but I would have sold after that anyways. Okay, moving on. The question number 3 as part of this decision tree. Why did I buy it? Do I really understand it and have conviction? Or did I buy it on emotion or on what the pundits were saying out there? This is really important. This is the mistake I actually made with a company called BHP Billiton, BBL. This is from the tale of two stocks. I'll go through these in a minute. But GE is a very confusing company. They have a lot going on. This is why I actually think that the fact that they have plummeted so much has actually shocked a lot of investors, and it's shocked a lot of analysts, because I think people kind of saw it, they weren't doing well, but I don't think anyone fully understood the extent of how bad things were until recently. The reason for that is this is a very complex company. They made a lot of acquisitions, and there's a lot of moving parts. It's an industrial conglomerate. And so the question becomes, for anything that I own, if I don't understand the company, I don't want to own it. And so with BHP Billiton, I actually did understand the company. I understand raw materials, oil, energy, these kind of things. I understand that industry, those kind of basic material industries, generally speaking. I understand them pretty well. But I would say which BHP Billiton, the reason I primarily bought the company was more based on the pundits. I heard people talking about it in the dividend space. Everyone liked it. Everyone was buying it. So I bought it for kind of the wrong reasons. But this question here, this decision tree question of why did I buy it? The right answer is I bought it because I understand this company. I understand it so well. I did not listen to the other people. I have conviction behind my purchase because I understand it. If the answer to the question is something other than that, it's reason to think about a possible sale, in my opinion, or at least think about, if I am going to keep the thing, boy, I better sit down and understand this thing better to make sure I really want to own it. It's very important when one buys and holds stocks forever like I do. I'm a dividend investor. I never plan to sell, although once in a while I do. it's really important to understand the companies that I own, because when I'm a shareholder, literally I own a fraction, I own a piece of the company. I got to understand what I own. And I have made this mistake before with BHP Billiton, where I understood what I own more or less, but I didn't buy it because I did the analysis. I didn't buy it because I really had that conviction. I bought it more because of what the pundits were saying. So there's kind of layers to this question here. But it is so important not only to understand the company, but to have found the company and have the conviction of the company based on one's own research versus the pundits out there. Anyways, moving on, have the fundamentals substantially changed since I purchased? So obviously, I think this is probably the case for GE. Most people are uncovering that the fundamentals are worse and worse and worse than anyone thought. There's all kinds of new things surfacing where people are doing analysis and uncovering challenges with the company. That said, let's say someone purchased just recently GE sometime 2018. On the prior question, they did their research, they truly understand it, and no, the fundamentals more or less haven't changed. But there's other people who bought it maybe years ago thinking that the fundamentals were up here, but now they're realizing, oh my goodness, the fundamentals are down here. And so it's so important in the world of dividend investing, especially when a stock plummets, which may happen once in a while. That's why I diversify, that's why I own 38 stocks, to understand, have the fundamentals changed? And look, fundamentals change. No stock goes straight up. And there's going to be stocks, all the stocks I own pretty much, they have cycles and they have their ups and downs, but the trend line over the long run is up. And so I understand fundamentals may not be perfect every year, and I don't look for every year to be an up year. I look for certain years to be flat, certain years to be down. I'm talking about fundamentals here, things like revenue, earnings, cash flow. But when a stock has fundamentals that are so poor that it has lost 87% over an 18-year period, this causes some concern. And I think, speaking to GE, most people are probably going to fall in the bucket where the fundamentals are not what they thought they were, unless they purchased this thing recently. Moving on, next question is part of this decision tree. Do I want to hold this company for the long term or forever? I don't think, and this is speaking from a dividend investor standpoint, my dividend philosophy, buy and hold forever. If I were a deep value or contrarian investor, I'd probably be looking for shorter term profits. But the question here becomes, would I want to own this company, GE, forever? For me, I've already answered this question on this channel many times over. I'll link again in the description below to my prior video about GE, but I just don't want to own GE forever. But there may be investors out there, they're like, look, I'm getting at a bargain basement price. I think that the dividend will recover, and yeah, it might take some time, but I'm willing to wait. And look, yeah, I do want to own this thing forever because I understand the company, I have conviction behind it, I did the research myself, I understand the fundamentals. So these are kind of two camps. I don't know the right answer, but for me, I don't even understand everything that's going on at GE. I don't like how the strategy has been consistently fumbled upon over the last 18 years, and I don't have a lot of faith. So for me, it's not something I would want to own forever, but certainly I understand there's people who disagree, who would want to own it. Again, the purpose of this matrix, of this decision tree, is to help people make the decisions that are right for them, and what's right for me may not be right for someone else, and vice versa. By the way, as I go through this, each of these questions, I kind of weight them similarly. And so I look, what are my answers to each of these? At the end, what I would do is tally them up and just understand how much weight do I have in this column versus this column? How much good do I have coming out of this versus bad? And I kind of weight them. If most of what I'm getting out of this exercise is bad news, my decision becomes pretty easy. If most of what's coming out of it is good news, again, the decision becomes pretty easy. Moving on, what's the next question? Do I feel good about owning this company? Does it motivate me to keep me pressing forward? I love this one. This is actually one of the reasons I sold BHP Billiton. Look, the purpose of this exercise is to keep investing non-emotional, and that is so important. At the same time, dividend investing can be a paradox. There are times where emotion is really good. It's a useful tool. It helps one achieve success in investing, especially for the long term. For me, dividend investing is all about yield on cost. I want massive cash flow. I know that to build that snowball, it requires persistence. It requires dedication. It requires years of time. It requires being all in. It requires the focus. It requires me keeping a tight budget so I can plow as much cash into stocks as I can. And all of this requires the general premise that I am happy with what I'm doing. I like it. It motivates me. It's exciting. And so these are emotional things. And what's interesting is if I have a loser like GE in my portfolio, and it's got me concerned, it's got me feeling down, it's got me thinking, boy, I don't really feel good about my dividend portfolio. I feel like my dividend portfolio, it's kind of messy. It's got this loser in it. It's got this stock that it just does not make me feel good. Look, this is an emotional thing, but I think it's an important thing to consider. If the emotions towards one's portfolio are negative, being caused by one stock, maybe it's GE or it's another stock that's plummeted, maybe it's time to sell, because if it's out of the picture, it cleans up the portfolio, it keeps it pristine, allows one to focus, and allows one to get back on the bandwagon, back on the right path, versus potentially being derailed, thinking, hey, boy, I lost this money on GE, it's got me down. And rather than being all in and trying to better my portfolio, it's got me just kind of distracted and maybe spending money on stuff that I wouldn't otherwise, maybe investing less money, maybe furthering my education on investing less than I would have otherwise. And so dividend investing is unique in that emotion is important because it is such a long game. It is a long journey. So what else? Given where the stock is right now, can I achieve a better yield on cost in another vehicle? And so this is an important question as well. Okay, GE is way down. I invest for dividends. Dividend is way down. Yeah, they'll probably raise it again in the future. I think it'll take a lot of time. Can I achieve a better yield on cost, meaning looking maybe 10 years out, 15 years out, future dividends divided by purchase price? Can I do that better in another stock? If the answer is yes, why have my money tied up in something here when I can have my money in something here that is far superior in terms of the opportunity to drive more cash flow? And so someone else might disagree with me. They might be like, Ian, hey, you're buying this thing so low that they don't have to raise the dividend much. They don't have to do much. They can raise that dividend in the future and you can get a great yield on cost, and I believe GE is going to recover. And so two types of investors. Look, I'll tell you, during the trough of the bear market, during the Great Recession, Ford is a company that was not paying I don't remember what it was, but they had a very low, if no dividend. They cut it during the Great Recession. Things were tough, but for people that bought back then, fast forward to today, the yield on cost is just phenomenal. Now the question becomes, is GE like Ford or is it not like Ford? And so if it is like Ford, there could be a good yield on cost opportunity here if one times it right and they're able to pull this whole thing back together. So I think that's a really important question. One has to weigh the pros and cons. Personally, I think there are other stocks here. I'll link in the description below my top 10 favorite stocks of all time. I think that there are other ways to achieve a better yield on cost than this one. That said, that's my personal opinion. Others may disagree, and that's totally cool. Last one. Could I utilize the capital loss for tax purposes? So I did a video on taxes. I'll link in the description below. I'm not a tax advisor, not a expert, but I picked up a bunch over the years. And let's say I lose a bunch of money. I take the loss, I'm able to write off up to $3,000 a year of that capital loss on my taxes. And so it helps me on my taxes. And if I have gains, I sold something else, I can cancel gains out with losses with no maximum. Let's say I have $100,000 in gains and I lost $100,000 on GE, I can cancel the two out. But let's say I have no gains, I'm just taking the loss, I can write off a maximum of $3,000 a year in loss. And so the scenario of canceling gains, again, That doesn't really apply to dividend investors because there just aren't a lot of capital gains because I buy and I never sell. But when I do sell, it might be a rare case like a BHP Billiton, but it's usually just with something like this, like a GE type of situation comes up once in a while and I've got to take action on it. The opportunity there is to take 3,000 and write it off. Now, if my loss is above 3,000, I can carry losses forward. So let's say I lost 9,000. I can write off 3,000 this year, 3,000 the next year, 3,000 the following year. So I can carry those losses forward. Of course, please speak with your licensed tax advisor. This isn't tax advice, just sharing my general knowledge of capital loss with everyone out there for fun and entertainment. Anyways, let's go back to all of this. A lot going on here. First, I just want to go through it real quick again to summarize with GE, but then I'm going to do it with BP, then I'm going to do it with BHP Billiton, because this is like a tale of two stocks, very similar stocks that face challenges and how I approach them using this matrix. So check it out. Obviously, I'm a dividend investor. Number two, is the cut temporary or permanent? I think it's temporary, but I think it'll take a good 10 years to get the dividend back. Why did I buy it? Honestly, if I did own GE, it probably wouldn't have been for the right reasons. I just don't have the motivation to fully understand this company. I'm just not super interested in this company at this point. It's just kind of what has happened at this company is off-putting enough where I don't want to take the time to fully understand it. That said, why did I buy it? It's kind of hard, I guess, to answer that at this point, hypothetically, but maybe it would have just been for reasons of finding deep value, and so it probably wouldn't be for the right reasons. Have the fundamentals changed? Probably they've changed. I think things with GE just keep getting more and more difficult. Do I want to hold it forever? No. Do I feel good about it? Does it make me feel good about my portfolio? I will tell you right now, if I had this in my portfolio, I would feel bad about my portfolio. That's just my personal opinion. Given where the stock's at now, can I achieve a better return elsewhere? I believe so. Could I utilize the capital loss? Yes, I could. So for me, if I go GE through this whole thing, I don't really get a lot of good. So using this matrix, though, it's going to be personalized to everyone. The decision tree, it's going to be personalized to everyone. So you might go through this and get very different answers, and that's okay. That's the purpose of the framework. It's to help people non-emotionally with one thing that's in their kind of emotional, get to the right answer for them. So for me, it's pretty clear with GE. Now, let me take a different one. BP. I bought BP actually after the dividend had already been cut. I bought it when the price of oil had tanked. I'll link in the description below. I did a whole video about it, and I understand this company quite well. I understood what was going on with OPEC, with them flooding the market with oil. I had a suspicion the price of oil would recover sooner than later. Anyways, let's go with BP. And I'm kind of going back in time when I bought BP. Is the dividend cut temporary or permanent? I thought it was temporary. How long would it take to get it back? I thought it would probably be actually like 5 years. It came back quicker, but I was willing to wait 5 years at the time I purchased BP, and I probably still would be today. Why did I buy it? I bought it because I understood it, and I really liked the opportunity to buy this company, this high-yielding company, at a good price, because I know that oil is cyclical, and I know that it was a tough time in the oil patch, and so I wanted to take that opportunity, so I bought it for the right reasons. Did the fundamentals change? Yeah, the fundamentals of BP changed because it's tied to the price of oil, and they had that horrible Deepwater Horizon tragedy that happened. Yeah, they changed. So, but I was aware of how the fundamentals changed, and I understood the company enough to understand how the fundamentals changed. Anyways, do I want to hold it for the long term? Yeah, when I bought BP, I want to buy and hold forever. No reason to sell. Do I feel good about it? Does it motivate me to own a company like that? Yes, it did, and it continues to. Given where it's at, can I achieve a better return elsewhere? I actually thought no. When I bought BP, my yield on cost is really good now. I'll link in the description below to the video I did about it. I don't remember off top of mind, but I do have it in that video. It's real good, and so I knew it. I knew, look, as long as oil could come back sometime in the next 5 years, no, I'm not going to get a better yield on cost anywhere but here. And so it made a lot of logical sense for me. Could I utilize capital loss? That didn't really apply to BP because I bought BP after the cut, after it already plummeted. And so go through the same matrix, the same decision tree with BP, I got to a really different conclusion than I would have hypothetically with GE. Although GE, again, is kind of tough because I just don't own it. It's always easier when I'm really close to buying something or I actually own something. Maybe I bought my first tranche of shares, I'm thinking about buying more. Then there's real skin in the game. It's easier to do the matrix, the decision tree, but that's how it goes. Last one, BHP Billiton. I'll link in the description below, biggest investing mistakes. One of my mistakes was buying this company, and I actually ended up selling it. What's funny is if I had held it, the dividend now has fully recovered, and so that just goes to show too why sometimes maybe it just makes sense to buy and hold forever, not worry about selling, because I would have never thought, but BBL came back, but I am quite frankly still happy that I sold it. So let's talk about that one. Did I think the dividend cut was temporary or permanent? I personally thought that it was more permanent. I was wrong, but that's okay. That's the purpose of the matrix, is to do the best I can with the data I had at the time. The reason that I thought the dividend cut was permanent is BHP Billiton was making most of their money from iron ore. Iron ore is the raw material that is being used to manufacture steel. And a lot of their iron ore was being consumed by China. My understanding during the times at which this company was facing challenges is the price of iron ore was plummeting, demand for iron ore was plummeting, construction in China was slowing down, and quite frankly, I thought that China might have other alternatives to buy their iron ore. It didn't have to come from this company. And so I actually thought that iron ore or steel, that is, in my opinion, not as important to the day-to-day operations of our planet as oil, because oil is used to fly airplanes, to drive cars, to manufacture plastics, to do all kinds of things. Whereas iron ore, it is used to make steel. And so do we need more skyscrapers, more buildings, or do we need to drive our car from point A to point B? So for me, from that perspective, I didn't think iron ore was going to be a quick recovery. I was actually wrong on that, but I thought the dividend cut would be permanent. Why did I buy it? I bought BBL for the wrong reasons. I bought it because the pundits out there were talking about it, and this is one of the rare cases where I purchased a company for the wrong reasons, and when it started falling, because I purchased it for the wrong reasons, I did not want to have the conviction to hold it because it wasn't the right buy for me. I didn't buy it for the right reasons. Anyways, that was a key realization of mine. Did the fundamentals change? Yeah, they changed quite a bit. Obviously, the price of iron ore tanking, demand drying up. I actually thought there was going to be some softness in the economy and that China wasn't going to continue to thrive as it is, and that demand would just stop for iron ore. And so anyways, I thought the fundamentals had changed. Do I want to hold it for forever? At the point at which, what's funny is when a stock is doing really poor, that when it tests the investor, that's when one truly knows if they want to buy it forever. If some of my favorite stocks fall in price, I get excited, I want to buy more. That's how I know if I want to hold a stock forever. But when BBL tanked, immediately I got concerned, I didn't want to buy more, I wanted to sell it. I knew I don't want to hold this company forever. I don't have the conviction. Does it make me feel good about my portfolio? No, it did not. By getting rid of it, did I feel better about my portfolio? Did I have more conviction? Would I be more focused on the right things? Yes, I would. Given where it's at, can I do better elsewhere? I certainly felt that way. And could I utilize the tax loss? Yeah, I could utilize the tax loss. So for BBL, it made sense for me to sell it. Now this stock has actually recovered. The dividend has recovered. Do I regret selling it? No, I don't, because sometimes it's a blessing in disguise when a stock plummets. Like I said, it really tests the investor. Did I buy this for the right reasons or the wrong reasons? This exercise taught me that I bought BBL for the wrong reasons. And so that's the tale of two stocks. I hope that helps just provide some perspective, some real world case study through my decision tree and how I use the decision tree to make decisions in these types of scenarios, because they come up from time to time. So I would be curious, do you own GE? Are you thinking about buying GE? If you do, comment below. Do you have your own decision tree process? If you go through this process, what conclusion do you arrive at? If you can share that with the community, it would be so amazing. And look, like I said at the beginning of the video, I truly wish everyone in GE all the best of luck. I am rooting for you guys. I hope it does well. Whether you're a dividend investor, contrarian investor, whatever you are, I am rooting for you. And so please share your experience below. We're a community here of investors. We are supporting each other. And so whereas this stock does not work for me, it's not the right thing for me, I am so supportive of anyone that is in it. So thank you for watching the video today. Before I leave, in terms of full disclosure, I own one of the stocks mentioned today. I am long. I own BP, ticker symbol BP. Also, by the way, I am long on 3M, ticker symbol MMM, makers of this amazing Post-it board. So I own those stocks in my personal stock portfolio. Also, before I leave today, a disclaimer. Today's video is not investment advice. I am not a licensed investment advisor. This video is just for fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Literally just sharing my journey here on YouTube for fun and entertainment. Also, I'm not a licensed tax advisor. Today's video is not tax advice. Please do consult your licensed tax advisor for anything related to taxes.